Welcome back to Stock Spy. Today, we are diving into two major players in the memory and storage space, Micron Technology and Western Digital. Both are key names in the semiconductor industry. But which one deserves a spot in your portfolio right now? Let's break it down. Micron and Western Digital both operate in the memory and storage sector, but they approach it quite differently. Micron focuses on DRAM and NAND flash memory, supplying components for everything from smartphones and PCs to data centers and AI servers. Their tech is baked into the backbone of modern computer infrastructure. Western Digital, on the other hand, make both hard disk drives and NAND flashes, and later is through a joint venture with Kioxia. While they serve cloud and enterprise client too, they still have a large footprint in consumer and legacy storage products. So while both touch similar markets, Micron is pure play on the next-gen memory, whereas Western Digital is a mix of old and new. But both MU and WDC are highly cyclical. Demand and pricing for memory and storage swing hard depending on tech cycles. Recently, we have seen a rebound in the AI infrastructure spending, especially in the high bandwidth DRAM and enterprise SSDs. That benefit Micron directly, especially as hyperscalers like Microsoft, Google, and Amazon ramp up their data center builds. Western Digital has exposure too, but it's more diluted due to its hard disk businesses, which is facing long-term secular decline. NAND flash demand is improving, but the pricing pressure remains high. Now let's talk numbers. Micron trades at around 15 to 18 times forward earnings, while the revenue growth expected to accelerate as memory prices rebound. Gross margins are recovering and could move significantly higher as DRAM demand increases. Western Digital, it's a bit trickier. It trades at lower valuation on the surface, around 10 to 12 times forward earnings, but that's partly because its revenue mix is less favorable and more volatile. Hard disk drive sales have dragged on performance, and restructuring costs have hit margins. When it comes to balance sheet, Micron is surely in a better shape, with more cash, less debt relative to its size. Western Digital has been working to clean up their financials, but its leverage is still a concern in downturn. Over the past 12 months, Micron has outperformed Western Digital, riding the AI infrastructure narrative and expectations of a strong DRAM price recovery. Analysts are turning bullish on Micron again, calling it a top pick in the memory space. Western Digital, while undervalued, remain more of a turnaround story at this point. It could offer upsides if NAND prices spike and if it successfully spins off, restructures and hard drives unit. But that's really speculative at this point of time. If you are looking for exposure to AI, improving margins, and cleaner growth path, Micron looks like a stronger pick today. But if you are a value investor with high risk tolerance, Western Digital might offer a catch-up trade. But you would be betting on operational improvement and industry pricing support together. For most term tech investors, Micron offers a clearer story, more direct play on the AI-driven demand for memory. That's it for today's breakdown on Micron versus Western Digital. If you found this helpful, hit that like button, subscribe for more stock deep dives. Let's know in the comment which stock you are betting on. This is Stock Spy. Thanks a lot for watching.